Good morning, traders, and welcome to our next edition of the Jackrabbit Club. This is going to be a little bit of a different video because we're not doing a stocks to watch this week because, with the market pulling back, I'm not looking to add any new risk at this time, and I think it's a prudent move, especially considering what we have on. So if you're watching this on YouTube or anywhere else that you may find this free video, know that we do this every single weekend in addition to the stocks to watch video, and we go through our portfolio. We go through a little bit more detail on how to manage positions, how to enter positions. So if you're not a member, you could just head on over to the jackrabbittrader.com and sign up for the Jackrabbit Club. You could either do that on the homepage in the top bar or on any of the other pages. You could see how we go ahead and manage a portfolio using weekly trades. Some of our trades are listed. You could see I'm a much longer term trader than most. All right, I was in this trade for 249 days and took a nice profit out of that one. Other ones a little bit shorter for small losses. So the whole goal is let the winners run, cut the losers short, and you can see that we've continued to do that throughout the year with a 15.37% return so far, and the markets are somewhere around a 9% return. So outperforming the markets with a simple trading system, and it's really that simple. So we're going to get into the markets first, then we'll look at some sectors, and then go ahead and actually take a look at the portfolio. So first things first, let's look at the SPY, and you can see we had a big reversal week. All right, we talked about this for a few weeks in the free videos, where we just saw these doji patterns, really some indecision, not much volume, not much conviction in the market at these highs. We were concerned with the pullback. We had one stocks to watch video where I think we only had like 8 breakouts, and I had noted at that time that just be careful here because market seems a little bit winded, a little exhausted. And sure enough, this week on whatever news is out there, it doesn't matter what the news is, we saw a breakdown from those levels. So at this point, we're essentially coming back into what was resistance, now becoming support. Okay, you could see that resistance throughout these 5 or 6 weeks with that breakout. Here we are testing it. All right, so that would be my first level I'd want to watch, and you can see we closed right at it, to 244. If that level fails, I don't see any reason we can't go to 241. And if that level fails, then we got to look, start looking at some older resistance points, maybe 238, and then maybe longer term trend support on this trend line here, the lower trend line. So this trend line is, let's see, is it actually broken? Yeah, this trend line's broken, so this one's gone. All right, so that's what we're looking at, and don't forget, we've had a run. Look at how far we've come just this year. We opened the year at 221. As I said, I think the markets are up about 9% for the year, but nothing to say that we're not, looking for maybe a bigger, a deeper pullback here, and just be aware of it. Next one, the Qs. Okay, consolidating at those highs this week. Sure enough, back firmly within that consolidation. And now again, we're holding trend line support here, the more accelerated trend. You can see we, depending on how you draw your trend line, you could see that maybe we either touched it, or if you want to use the lows, maybe we're still above it, if you come through here. But regardless, still think that we just maybe chop around in this box. But we've seen this before where we have these big down weeks. All right, you have another little follow through week, and then a move higher, all right, off those levels, and sometimes a very strong move. So again, just because we had one bad week doesn't necessarily mean that the trend is over, but just be aware of what's going on in the markets. All right, the Dow, all right, almost a bullish engulfing where we had a nice breakout this week. Last week, and then the body of this candle almost fully engulfed the last candle, meaning that there was a lot more selling pressure and could present a short-term top. Here, again, just looking at the trend line support. And last but not least, the IWM. All right, we talked about a potential breakout. Sure enough, that didn't work. We reversed right back into the box. Some more downside follow through, which we thought was finding support at the 139. And then this week, we broke through that 139. Again, I see no reason that we don't test the 132 area. While this is some support back from the middle of May, again, it's not much in terms of this longer term support down around 133. So markets look exhausted. They look winded. Look like we could potentially see some more downside follow through, especially that we close closer to the lows on most of them. But we take it week by week, and this week I'm not adding anything. I'm managing what we have. We're actually going to be exiting, I think, WYNN for a nice little win. Not much, but a win nonetheless. And last but not least, we're going to take a look at the sectors and see what's going on. So I've added a new column here, just so you guys are aware. This percent change, the first one is by the week. All right, so you can see that the S&P lost 1.34% this week. The Q's 1.29, Dow, and then IWM was the big loser at 2.68. Same here with the sectors. First column being the weekly loss, second column being the monthly, or gain or loss, I guess. So the XLK, all right, gave back a little bit this week, but we're still in that uptrend, okay? You still have that uptrend in place. You still have that consolidation, previous consolidation. We're still holding that support for the most part, okay? So, we have one here and another one up in here. So we're pretty close to holding previous resistance, but, again, just chopping around sideways for the last few weeks. The XLU, all right, topping out. Another topping tail. It's actually a lower high than what we had. So we had this nice big reversal off that trend line. Here you have a lower high. So again, let's just be wary of what's going on in the markets. The XLY, okay, while you still have that support right around 88, your resistance up at 92. But again, still holding a couple longer term trend lines. You have one here, and then you also have, this one actually may be broken. Yeah, that one's broken. So there's your longer term trend. So trend is still higher on the weekly charts in most of these sectors, but I think we are at the point where we're potentially exhausted, and we need to see some digestion of these moves before we could really move higher. The XLP not looking great. The XLI, the Dow, is comprised a lot of the industrials. But here you go. You still have that longer term trend in place. The XLF was breaking out last week. This week, a firm rejection of that breakout. All right, moving lower, and you'll see that in some of our positions. XLB, again, trend line potentially broken. Okay, you had this rising, almost like a rising wedge pattern. And there you go. All right, so where do we think maybe the XLB goes? Probably back to these longer term resistance levels, back through here, maybe down to the 51, maybe a little bit lower. Okay, XLV up, consolidated, now pulling back, but still holding trend. And the XLE, what looked like a breakout, actually is a failure, and still holding 64, which I think is big. But I would say any breakout or breakdown below 64, possibly looking like more like a short than anything else. And then you can start looking at some levels, maybe first levels right around 60, second level somewhere in the 53 area. But moral of the story here is, while the markets look exhausted, a majority of the sectors are holding up on their longer term trends. So let's see how that reacts. Again, taking it from a larger perspective down to a smaller perspective. I'm still a little wary, but longer term, I'm happy that we're still seeing some uptrends being held. So let's take a look at our positions. All right, first one, Amazon. All right, so Amazon, we had a stop in place right around that 965 level. Looks like it rallied hard on Friday, up $11. So while we finished the week down 2.8%, we still held that 965 area. So that's a good sign. And then look, came right to our drawn trend line. So maybe we're look for a bounce in Amazon. AVGO, all right, we've had all these topping tails, 1, 2, 3, But look at what's actually happening. It looks very controlled, right? It's not like a huge sell-off. It seems like a very controlled pullback, not meaning that it does anything, but just be aware of that. So, while we did hit some resistance up here at 254, I would expect that if we do get down to 232, based on how controlled this is, that we would bounce. All right, but for right now, we're in at 235.80, so showing a small little profit on that one. But again, that one down 3.6% this week. Berkshire Hathaway B. All right, we had a nice position moving higher in this, and sure enough, what looked like a great breakout last week was a gap down. I guess Berk A maybe reported earnings earlier or over the weekend or something like that. But we're inside. We're inside this bar, which is good. So let's just see how this plays out. But I was really looking for it to stay over 175, especially on this huge breakout. Kind of kicking myself for having such a large position and not using that huge week to take some profits. But it is what it is, and we just manage trades as we go. Rockwell Collins continues to move higher. This week we had some more news that potentially they were going to have a merger, I think with UTX. So the stock gapped all the way up to 127, traded as high as 128.30, and closed around 124. So nothing wrong with this at this point. Now, if there is a news of an actual merger and this thing gaps up and the news is confirmed and it comes out that whoever may be buying them, the talk was the purchase price would be somewhere around the 140 area. If that happens, you sell your position. It's very simple. You get that pop and the news is kind of passed, you're going to sell the position, the entire position. All right, you're not going to worry about maybe somebody else coming in and driving the price higher. If you can get a pop on a M&A news, mergers and acquisitions, then you just take the profit. All right, it's that simple. So if that happens at any point during the week, that's a take the profit type of scenario, and you just take the profit. Microsoft broke out, and again, look at the bottoming tails. All right, one came all the way down to 71.45, another one 71.30. So you are seeing some support, some buying power come in that 71, 72 area. Raytheon, all right, continues to move higher. All right, we can't really do much with these positions. We're not really managing our stops too much. I would say Raytheon, if you want to, because of the size of the position, if we want to go ahead and take half off, if we, at the lows, look at what we've been doing. Right, 1, 2, 3, 4, 5, 6 consecutive weeks with a higher low. All right, I think you can go ahead and maybe trail a stop up to 173.30. Leave this one in place, and maybe when that one gets taken out, like when a previous low finally gets taken out on a closing basis, you take half the position off. All right, that's a way to trade those. UNH is exactly what we're doing. All right, we continue to trail part of the position up to previous highs, and we've done it now for multiple weeks. So again, this is where I don't necessarily recommend trying to take profits at a particular level because you don't know. All right, instead we're managing the position. We're letting the position kind of dictate where we want to trail stops to, and we've done it now for 7 weeks. So while we bought all the way back here at 147, we're now trading 192. Okay, it's a time that we're sitting on. Let's go over to the monitor tab, and we can go UNH. All right, we're sitting on, just in this account, we're sitting on $814 profit, 30%. Okay, and that's just in this account. So as I said, I think it's prudent that if you get a breakdown, you take half that position off, see where it comes back into, and then look to manage the position. And maybe it comes back, we find some support in the 185, then we break out over 197, then you add your full position back on and you continue trading it like you were. And WYNN, finally on WYNN, looking like it hit that resistance at 140 and has now pulled back to 125. We got in around 110, very small position, but we will take profits in that. And if we look at all the accounts and go to WYNN, Okay, so it's a 14% gain, and it's 400 bucks. So again, not a huge win, no pun intended, but a win nonetheless, and it's one that we'll gladly take off for a small profit. Best Buy. We're on the other account now. Best Buy, all right, topping tail, sure enough, right at that 61.96 area. So this one, while it moved higher, I would not be surprised to see this low taken out. For this week, maybe come back into trend line support, but right now, nothing really to do in Best Buy, nowhere trail stops to. If you have an oversized position and you want to take some profits, this would probably be a good spot to do it, just based on this week's candle, a topping tail pattern. DHI, all right, just really continues to move sideways since our entry, nowhere to trail stops to. EA, similar to Microsoft, where it's finding some support in that 113 area. Again, nowhere to really trail stops to. FedEx had this great move up, and now it looks like it's just continuing to come back down. We've trailed stop once to 187. I'm hoping, but that maybe we come back and find some support in here at the breakout level, which would be around 197, or even trend line support would be even better. But right now, this one looks like it just wants to keep selling off, and we have a small enough position on that we can do that. We've sized our position correctly that we can just sit through that, and while the yield is not great, it's under 1%. I will sit and get the yield. That's perfectly fine. Corning, all right, we've trailed stop up, had this huge down week. Sure enough, this week we tested below our support level of 29, and now closed right above it, similar to there was another one that did that, I forget, but we'll stay in the position. Amazon was the other one. All right, so the style or the process dictates that we stay in that position. HIG, all right, again, look at what we have here, similar to UNH, and again, another one I'm not remembering, but look at all of the lower lows or the higher lows, right? We started here, we got one higher low, higher low, higher low, higher low, higher low. We didn't close below that low. We did test below it on this bar. Higher low, higher low. So with the markets kind of being in maybe some pullback mode, not an alert, that's not what we're going to do. We're going to put a trailing stop up at 55 to take half off. Okay, this is the way I love to do it. If you get into these positions where they run on you like this, you see a pullback, you take half off. Okay, it makes our life so much easier because you're locking in a small profit. Even if this trade came all the way back down to here, you're essentially getting out at break even. You're not really losing any money on the trade. So again, just another spot to go look at, maybe taking half off at the top. ICE has just continued to move sideways. I like this level here at 63 as a potential trailing stop level, but what do we need to see? First thing I would want to see is some actual buying power come in, all right, which it looks like it has because we went down, but we closed closer to 64. This week we came down again, closed above 64.75, all right, but in all reality, I would love to see this become a new consolidation, and with that, in order to confirm the low, I want to see a close over 68. All right, and then we could trail stop up. ITW, this is one where we did take half off. All right, we took half off right around 145, and now we're trading 138. We left our existing stop in place at 136. If that's taken out, I will get out of the other half of the position, which we got in at 128, and I'll make a small gain on that and plus a larger gain on the beginning. All right, it's very simple, and that's why I really love trading the weekly charts, because it's not about what you're doing, it's about how you're managing the trade that really matters. And you can always control how you manage the trade by following a simple process. Obviously, you can't control what the trade does, but by taking half off, letting it pull back, come into you a little bit, adding to positions, it really is the best way to trade. And because you're always kind of in touch and in flow with the market, if that makes sense. You're adding when the market's strong and you're reducing when the market's weak. And that's how you outperform. You're not keeping the whole position on the entire time. And with that, like I said, you're able to stay in the ones that are outperforming and reduce risk in the ones that are underperforming. So when you can have these wide stops and size the position where you're nice and small, no position is really going to dictate how you dictate your emotions, then you become kind of almost in touch with the market and understand what the market's doing. And as I said, you just react. All right, there's no prediction in anything that I'm doing, anything that I've gone through here. There's no prediction whatsoever. So in JPM, obvious stop level could be 90. All right, but again, I have to see a breakout over this nice tight range. All right, look at what's actually developing here. You had a big pull up, a big move up, sideways. I would love to see it hold over 90, and even better, I would love to see it at over 95. And again, just go down the process. Okay, now if we get a breakout, say this week we break out over, let's say we finish the week at 96. What are we doing? We're doing two things. We're trailing our stop up to the low, and we're adding to our position. Okay, and that then doesn't increase any new risk. All right, we're always keeping the risk the same, whatever it is, 1%, 2%, whatever you are having in your portfolio that you're willing to risk, we're keeping it the same, but we're being able to add to our position because our stop is much tighter. All right, and again, that would be a stock that is outperforming the market, is breaking out again. We're adding to it, so we're getting more involved with that, but we're never reducing our risk, and that's important. Look at Netflix, all right? We had this big pop on earnings. We took some profits, and we could have still had half a position if it continued to run, but it didn't, and now it's pulling back, all right? So now it's pulling back, and now we're just letting it do its thing. I don't even think, like some of these positions I forget I even have on because they're so small, all right? I mean, again, I took half off, so I still have 20 shares of Netflix, so it's still like $3,400, but it's so insignificant to my actual portfolio that you kind of almost forget about it and you just let it work. And last but not least, Tesla, all right, moving higher during the week, pulling back. So this could be a lower high, just something to be aware of. And our stop is down here at 304. But again, just let the thing work. You can still see that it actually, this can't be right. This must be, this percent change is not right because there's no way it went up. Last 5 days. That makes more sense. Last 5 days. So these should all actually be 5 days. That's a good thing to note. All right. So those percentages are going to change slightly. I had 7 days in there, but I guess 7 days must encompass part of last week, which is not what we want. But anyway, you could see, up 0.27%, down 4.92, and again 4.92 on Netflix. Yeah, not good, especially if you were oversized. Maybe you have 50% of your portfolio in Netflix. Not good. But when you have less than probably 3% or 4% in Netflix, it's just a little ebb and flow. And as I said, if you look at the performance that we have, we're still outperforming and we're still doing well. So again, I hope you guys enjoyed this video. That's it. So we're going to exit WYNN. We're going to trail some stops. We're going to try and take some profits on breaks of weekly lows, just to reduce some risk, build up some cash in the portfolio to allocate to new positions. Okay, think about that as well, because there's not an endless supply of cash. So you want to make sure you always have some nice cash on hand. And again, if you're not a member of the Jackrabbit Club and you enjoyed this video, definitely go ahead to the website, jackrabbittrader.com, sign up, and you'll get these videos every single weekend. All right. Have a great rest of the week, and we'll catch you next week. Take care, guys.